Well, we've got a fascinating tug of war playing out on the markets right now. On one hand, you have American Express, which is the best performing stock right now on the S&P 500, absolutely besting expectations, and investors overlooking some warning signals that they are talking about, specifically when it comes to consumer spending in certain areas like dining, air travel, areas that have really benefited post-pandemic from pent-up demand. Visa, which also beat expectations, also contained some warnings about consumer spending habits. However, those stocks trading up and helping to lift the overall markets at a time where we are seeing some pretty big weakness on the other side of the ledger. Take shares of Intel, for example. We talked about this company signaling that they're going to see the worst quarterly revenue since 2010. Just to put a fine point on it, they're expecting a loss in the upcoming quarter of 15 cents per share. The market was expecting profit of 25 cents per share. So way offside on this one, even as there were building concerns about Intel's ability to deliver in the most recent quarter, and now concerns that perhaps the dividend is not safe. Let's bring in Ivana Delevska as the founder and CIO of Spear Invest. Ivana, thanks so much for being with us. This is an Intel story, but there's also questions about whether this is a semiconductor story, a sector that has been broadly rallying. What are you doing with Intel right now, and how are you interpreting what it means for the sector?
Well, thanks for having me, Amber. The semiconductor sector is going through a major down cycle right now, but a lot of that is already known. This started in the second quarter of 2022. So by now, you should be starting to see inventory stabilizing. What was particularly disappointing in Intel's results is the company's execution, because not only that revenue came significantly below expectations, but margins were significantly lower. And with this being a turnaround story, execution is key, right? So if you can't really rely on management to deliver numbers, how can you believe their CapEx plan will generate returns?
You know, that's an important point, because at the same time that they're signaling cost cuts, they have pretty firm commitments when it comes to this turnaround plan that requires spending, establishing major manufacturing presence, for example, in Europe. And so they're not going to be able to cut that perhaps as easily as they may be able to cut the dividend, though it may not come to good news as investors.
That's right, Amber. And the biggest concern here, too, is that semi-manufacturing is a pretty difficult business. So going back more into that, people are looking at TSMC and how successful they've been. That's not an easy business. It's all about execution, and it's all about delivering good margins. So I think the fact that they're missing here on execution is questioning the whole expansion plan.
And it's interesting to see rival AMD down, but not down sharply. It's only down about 0.5%. Does that really underline, it sounds like your perspective, that this is an Intel and a management-related misstep versus a broader warning about the macro environment?
Yes, that's right. I think that's spot on. This is really more of an Intel. The revenue miss is applicable to broadly the semi space. So it just tells us that things have not turned around to the upside just yet. But the real downside for Intel, it's all about execution.
Okay, and we're looking at shares of Nvidia right now, which is not down at all. In fact, it's up and is at trading at the highest level. Let's see here, since May of last year. And it's gotten a little bit of a tailwind with the whole obsession over AI and the enthusiasm over ChatGPT. Is this a name that you like here?
So we really like Nvidia, Amber. The play here is all about AI and Nvidia's positioning in GPUs, which will be the leading processor for AI. It's not all about ChatGPT. I think it's important for people to understand that ChatGPT is only one application from one of the large language models that was recently built. But we're going to see a lot more developments coming in this space and a lot more applications. And we believe NVIDIA is going to be behind a lot of those.
So it looks like you're really looking to pick your spots in semiconductors versus some people just view it as a sector play if you're going risk on, if you're a little bit more optimistic about economic growth.
That's right. So we believe this is also a broader point. we believe going into the next 5 years, it is all going to be about picking your spots where you want to be. We're not going to have the tailwind of the Fed rising tide lifting all boats. So it's really all going to be about picking the stocks that are going to be well positioned to win.
Well, let's talk about one of those stocks. Shopify has been on something of a tear recently. I'm just looking at it now. Since announcing price increases, which I think are the first major price increases they've done in something like 12 years, the market has just consistently been rewarding this company. Is this something you like here?
We love Shopify here. It's somewhat of a recent idea for us since late last year. We believe the market is misunderstanding the story here. And we believe the price increases are actually one way that is demonstrating this. The pricing power that these companies have and many other software companies, it's pretty incredible. So the fact that they can raise prices by 33%, we will see how it goes, right? We have to watch churn and if there is any impact on their customers. But we believe that it's going to be a successful hike and it demonstrates the value that these products deliver for their customers.
So tell me why you liked it, because you obviously liked it before the price increases. Did you think this was a possibility or were there other factors at play?
There are several other factors at play, and the price increase just demonstrates one of the reasons why we like it. But basically, Shopify is generally misunderstood by investors. People view it as a logistics play, while it's actually the operating system for retailers. So retailers, especially independent retailers, they don't really have a good way of going to market, and Shopify enables that. So the fact that they're able to do a price increase just demonstrates the value that they're adding. And we're also excited about their enterprise product. They're basically offering something very similar to what independent startups use to large enterprises to be able to go to market more efficiently. So we're pretty excited about that product as well.
One of the other stocks that you like right now, and it has been absolutely beaten up, is Snowflake, one of those money-losing tech companies that looks like they're about to turn the corner on profitability.
So, Amber, looking at it at the beginning of this year, cloud stocks have significantly underperformed tech. And while people are getting excited about AI and investing in chips and investing in Nvidia, they're missing the point that AI will require a lot of data. And where is that data going to be stored? It's going to be in the cloud. So we're looking for companies that are offering new and innovative cloud solutions that are going to be able to enable all of the applications to run more efficiently. And Snowflake is one of those.